Hi, Georgette Rowland here. Welcome back to the Financial Gym, the only place where someone else does the working out for you. Today we're going to talk about a subject which on the face of it is not the most exciting and actually quite stressful for some. But I'm going to show you a way of how you can use what is a real pain in the you-know-what to probably make you a little bit of money as you're calculating. Today I'm going to share a little tip on how you can actually get the tax office to let you keep some of the VAT you've collected. If you dread VAT return time, don't despair. VAT can even be fun. Alright, maybe that's pushing it, but it can at least be less daunting. Firstly, decide that VAT funds were never yours to begin with. If you make a sale and charge £2,000 and you add VAT using the current 20% standard rate, that would add £400 to that invoice. Now many business people collect that £2,400, bank the whole lot, and it forms part of their cash which they use to pay expenses. If you've accepted that the only money due to you is the £2,000 on the sale only, then you need to move the £400 VAT out of the equation. Set up a separate account and move the VAT portion for every sale you make into it. So far so good? But how does that make me money, I hear you say? Bear with me. Firstly, the most obvious advantage is that when it does come time to pay your VAT, you have the money available and you're not panicking about how you're going to pay it. Secondly, the chances are that your VAT liability in any period will be less than the amount you collected, because it will be reduced by the VAT on any purchases or expenses that you made. So if you set aside the original £400 VAT and the VAT you owe for the period is £300, you've saved £100. Now leave that where it is, or better still, shift it to a deposit or savings account and use up to build up your cash reserves. Watching money grow is a pastime that I'm sure you could never tire of. Now that assumes you're on a standard VAT scheme. If you make enough purchases to offset against your sales, but even if you don't, your VAT liability will always be no more than a 20% or whatever the rate of the day is. Anyway, no more late payment warnings or surcharges. Can you imagine that? Even better, if your turnover is less than 150,000 a year, there is potentially even more money you can claw back. For those businesses, it's a scheme called the VAT Flat Rate Scheme, or FRS, which enables businesses to apply a lower percentage rate to the amount they have to pay to HMRC. To be able to do this, HMRC must enrol you, and they give you the rate that you use, and it varies depending on what type of business you are in. It's particularly suited to the self-employed, such as consultants and professionals, and the trades. The key is that while you still add the full standard rate VAT to your sales invoices, you are only liable for the lower percentage when it comes time to pay your VAT. It was primarily designed to simplify VAT calculations for small businesses because you only have to calculate the VAT on the sales you make. VAT on expenses, however, cannot be claimed under this scheme except if you buy any assets over £2,000. So the lower rate is designed to compensate for this. So let's assume HMRC have agreed that your FRS rate is 13%. Using your £2,000 plus VAT, you still invoice £2,400 gross, but on your scheme you're only liable to pay the VAT man 13% of it. So you collect the £400 off your customer, but you only pay £260 to HMRC and keep £140, which is the difference. The disadvantage comes if you have a high percentage of supplier bills who charge you VAT and you regularly can claim for them, so that you end up having quite regular refunds. You may be better off then staying on the standard scheme. And remember, over 150,000 turnover annually makes you automatically ineligible. Also, because the retained amount adds to your profit, there is tax on that profit to pay, so consider this as well. But this is still only a portion, and the rest is growing in your account, so you can pay that tax anyhow. This one may not make you rich, but you can use it to unearth hidden cash as well as keep the taxman at bay. Thank you for listening. Georgia Rowland from the Financial Gym, saying if you haven't already, go over to www.financialgymforbusiness.com, download my ebook. It's free. It will give you access to other freebies on the other side. And also, if you know anybody else who may be able to take advantage of the information I've just given you, particularly if they're VAT registered, then send them along to this video so that they can also get the link to share. In the meantime, have a lovely day, and I'll see you in the next video. Thank you. Bye.